Welcome, everyone. Thank you so much for joining us this evening. I'm Charlene, one of the three founders of Operations Nation, along with Ashrina and Astrid, who you've probably already heard chatting away. The three of us are so excited to bring to you the fourth event in our six-part series called Finance for Ops. So many of you guys have already been to our previous events, so I won't spend too much time talking about Operations Nation, but in case you don't know who we are a one-stop shop for anyone with an interest in or passion for operations. We really range. So we are young people who don't know that they would make great ops professionals. We are here for people who are aspiring to be ops managers or leaders, but aren't sure how. And we're also here for existing startup, scale up, ops managers, heads of operations, chief operating officers who are seeking more resources to be the best op leaders they can be. And in short, our mission is to curate and create a knowledge base that's filled with really relevant tools, content, resources, and workshops just like this one to help operations professionals not only survive, but thrive at every stage of their ops career. And so that's why we're here today. So why finance for ops? As an operations person, at some point in your career, you will inevitably find yourself, whether you like it or not, being accountable for finance operations in some shape or form. And especially if you're an earlier stage business before you hire a finance manager or a CFO. And sometimes you're even accountable afterwards for some shape of finance. It could be budgets, etc. So the Finance for Ops series is for those of you who don't consider yourselves to be finance pros, myself included, but wear the finance hat or oversee finance in your operations role. So far, we've already hosted 3 events in the series. 1, what is the role of a finance team? 2, capturing accurate data, and 3, financial planning and forecasting. And today, as you guys know, is all about financial compliance, from exciting things like company house filings to company secretaries to HMRC compliance. So we want to first recognize our content partner, Quantico Financial, who has partnered with us for the entire Finance for Ops series. Quantico delivers world-class finance teams to rapidly scaling businesses. We want to give a special thank you to Juvern C, who is their co-founder and chief operating officer. And she helped us to create the structure for this entire Finance for Ops series. And it's great to get her experience because she knows what it takes from both the operations and finance side. We'd also like to give a special thank you to PayFit, who is our content partner for this specific session on financial compliance. PayFit is an integrated payroll and HR software helping over 4,000 startups and SMEs automate their payroll and HR admin tasks. Now, I have the pleasure of introducing our 2 speakers tonight. First, Roshni Patel, who is currently CFO at Karakuri. Previously, Roshni held various senior finance positions across a number of corporations and SMEs, including Universal Music Group. Roshni will be taking us through all of the topics I mentioned before and answer any questions you might have at the end of the session. We're also joined by Nichola Hales, who's currently payroll specialist and product legal advisor at PayFit UK. Previously, Nichola served as payroll specialist at Virgin Money. She will be taking us through the intricacies and best practices when it comes to managing payroll and HR. So I know this goes without saying, but just a bit of housekeeping about how we're using this particular version of Zoom. Please use the chat function to say hi. I think some people have already done that. You can say hi to us and to each other. And we'll also be using the Q&A function to gather all your questions in one place. So just to help us out, it's fine if you do it in the chat or forget, but please do try to use the Q&A button so that we can collect all the questions in one place. And you can also upvote other people's questions in case you agree with the relevancy. We will answer them in the last half hour of the event from 7:30 to 8 o'clock.
Hi everyone, I'm Nichola and I work at PayFit as payroll expert and product legal advisor, and I'm going to be talking you through the payroll compliance section of this evening's event. The key things that we're going to look at this evening are what is an employer, how to set yourself up as an employer. Then we're going to take a look at what an employer's payroll obligations are and why payroll compliance is so important. And I'm then going to finish my section with some common payroll issues relating to compliance and how to avoid them. Now, just before I start, I want to give a quick overview of who we are at PayFit. PayFit originated in 2015 in France, which arguably has some of the most complex payroll legislation in the world. And we have then since extended into Spain, Germany, the UK, and very recently Italy. So what do we do? PayFit offers a combination of payroll and HRIS services. This includes automated calculations of the likes of income tax, national insurance, statutory leave and statutory payments. As well as this, we offer automated reporting to the HMRC and a constant review of payroll legislation to make sure that the features that our customers use in the app are always fully compliant. As well as this, we offer a self-service module for employees where they can record annual leave and expense requests, as well as view their pay slips and P60s. Now, we feel that payroll is a central and linking part of an operation structure, and it sits quite nicely between finance and HR. There is about a 50-50 split of where payroll sits, 50% of the time in finance, 50% of the time in HR, dependent on that particular company structure. But what we have noticed is over the last couple of years, finance and HR systems seem to have progressed to become a lot more user-friendly, a lot more intuitive, and become a tool that is time-saving for those who use it. However, it almost feels like payroll software has been left behind a little bit, in that the look and feel of most payroll softwares have remained the same, and the accessibility of payroll softwares is still very much limited to those who have quite a lot of payroll knowledge, and that's something that we wanted to change. So our aim at PayFit is to give accountability of payroll back to employers without expecting employers to become payroll pros overnight. We want to make payroll accessible for all employers because payroll can be one of the biggest costs to a business. So it feels right that a company should always have hands-on access to the costs associated with their payroll. So how do we do this? We do this through a combination of automating as much of the statutory legislation as possible. So we believe that our users should not have to manually calculate the likes of sickness or maternity leave, income tax, nor should they have to worry about the compliance of a payroll software. But as well as this, we offer hands-on support from the likes of payroll experts, customer success teams and dedicated account managers right the way through a company's journey with PayFit, from when they onboard with us to 1 month or a year down the line, where we're always on hand to provide help and support. So let's take a look at payroll compliance. First, I wanted to start with what is an employer, because I feel like this is a very important question to ask. Within the UK payroll legislation, you are an employer whether or not you have one person in your organisation or whether you have 100 people in your organisation. Whether you are a small employer or a large employer, the obligations that you need to meet in order to ensure full payroll and pension compliance remain the same. So how do you set yourself up as an employer? So you've established yourself as a company and you now want to take on employees. The key thing or the key task to do to ensure that first step of compliance is to register successfully as an employer. And it's essential to do this so that the HMRC and the pensions regulator know that you are now taking on the responsibility of paying employees and the associated tasks that go alongside this. Now, by registering as an employer, you gain what you call your pay-as-you-earn credentials, which allow you to submit what we call your RTI submissions to the HMRC. And these are two types of reports that you submit every month to the HMRC that detail employee and company tax and national insurance information. Now, the actual setup or the actual application process is very straightforward. It can be done online for most companies. Now, it normally takes up to 5 working days for the HMRC to send your credentials, and you can't submit any reports to the HMRC before this. So please take this into account if you are registering for your credentials for the first time, so that you get them before your first payday. So now let's take a look at what employer payroll obligations are. I've split this into 3 different categories. Firstly, the employer obligations to employees. So employees expect to be paid accurately and on time. As well as this, employers have obligations to make sure that employees receive the correct documentation that they are entitled to. This includes providing a pay slip no later than payday, providing P60s and P11Ds at the end of the tax year, and also giving all employees contracts of employment. Now, there are also obvious payroll obligations to the HMRC. This includes reporting your employee and company tax and NI information every month or every week or every fortnight, however often you run your payroll. And then making sure that any tax liabilities or national insurance liabilities are paid to the HMRC every month. You also have obligations to make sure that employees are receiving the statutory minimum entitlements, such as the entitlement to 5.6 weeks of annual leave and the national minimum wage. And finally, there is an obligation to the pensions regulator. The pensions regulator is kind of the newest branch of payroll compliance, with the introduction of auto-enrolment a few years ago now. And employers have duties when employees start in their business, even if it is only one employee, to assess anybody that joins and enrol them in a pension scheme if they are eligible. There are also obligations to make sure that you are meeting the minimum employer pension contribution, and you are submitting monthly reports to your pension provider detailing all of the employer pension contributions that you have taken during the payroll run. So why is payroll compliance so important? Aside from the obvious fact that when we think about compliance, it is because there is a legal obligation to do so, but there are 3 other reasons that I would like to have a little bit of a dive into. So the first one is employee engagement. I've just put a little statistic on there because when I read it, I was quite surprised that 44% of employees would consider leaving a job if they were paid incorrectly. Now, very few things put strain on the employee-employer relationship more so than incorrect or late payments. Your employees' pay that they receive every payday is the main tangible output that your employee sees as a result of their work. So getting this right really strengthens the employee-employer relationship, and also it promotes positive employee engagement. Next is company reputation. So company reputation directly links to the growth and success of a company. So what we don't want to happen is that company reputation to come under any sort of disrepute with things such as the likes of the HMRC and the pensions regulator, who operate name and shame policies for employers who don't comply with things such as the national minimum wage or automatic enrolment duties. And finally is company finances. So running a business costs anyway. So factoring in additional costs for fines and interest, is not something that we want to do, and it's not going to help in running a business smoothly. So the third reason to make sure that compliance is important is to really minimize the impact of receiving any fines or interest on late payments or as a result of non-compliance. So what we're going to take a look at now are some of the common payroll issues, and you may find that as I'm going through the next couple of slides that a lot of them do interlink. But the three main reasons for payroll non-compliance are missing deadlines, whether this is missing an employee's payday or missing a particular reporting date to your pensions regulator or to the HMRC, or even missing internal payments and reporting deadlines, because even missing internal payment and reporting deadlines puts a strain on the relationships within internal teams. The next is complex legislation. So complex legislation is one of the biggest areas of non-compliance because payroll legislation is so vast and it changes rapidly at the moment, as well, as you may already know. And a lot of complex legislation has been introduced in quite a short period of time over the last couple of years. And finally is making incorrect payments. So again, making incorrect payments to your employees is never going to result in a happy employee. Same with the HMRC and pension providers, who are able to issue sanctions and fines if you fail to comply with issuing correct payments to them. So how do we avoid missing deadlines? So the key to avoiding missing deadlines is understanding that your payroll key dates do not change. There are very few key dates that change in the payroll cycle because they're either set by a piece of statutory legislation, such as when your HMRC reporting is due or when your HMRC payments are due, or because they're set by a contractual arrangement, such as payments to employees or pension providers. So if you can focus all of your payroll processes around these key dates and make sure that everything you do leads up to those dates, you can really strengthen your ability to comply with payroll deadlines and minimise the risk of any non-compliance in this respect. Now, understanding complex legislation, I'm sure many of you who are on the webinar today will, in an operations perspective, don't want to get bogged down in the detail of complex legislation, because payroll will only form part of the role that you currently do. So the UK payroll is increasing in complexity, but another aspect of payroll legislation that we see at the moment is how rapidly things are introduced. A prime example of this is the likes of furlough leave. For an example, the furlough leave guidance was issued on a Friday evening at about 5:30, and employers were then expecting to be able to make claims on the Monday. So we also have some rapidly changing legislation as well. Now, I have given 3 suggestions because, like I've said before, we don't expect operations people to become payroll wizards. It doesn't form part of your day-to-day role, and it's not the only part of your role. So I think, provided that you have the right people, the right tools and the right guidance, you are still able to remain fully compliant and still have a positive impact on the payroll that you may be in charge of running. So when we talk about people, some of you may have trained in-house payroll staff, and if you do, you can utilise them to break down legislation and translate it into digestible information, also to maybe offer training to non-payroll staff or employees so that they can understand some of the potential changes that impact them. Or if you have some sort of support from your payroll provider, for example at PayFit, we have a team of payroll experts who are always on hand to help, not just with PayFit features, but also with complex pieces of HMRC and payroll legislation. I would always urge you to utilise the support of the people that you have, even if they aren't necessarily in-house payroll staff. So next are tools, and one of the pieces of legislation that a lot of companies had prepared for to come into effect this year was the IR35 regulations, which changes the way that we process the payroll for those who would originally not be classed as employees. So a lot of companies went to a lot of lengths, both administratively and getting their payroll softwares ready for this legislation to go ahead. But it was then postponed very last minute at the end of March and will now not take place until next year. So one of the best tools that you can have to make sure that your payroll runs smoothly is a good payroll software, because a good payroll software will be able to react to the legislation on your behalf, and it will be able to take on the administrative burden of making sure that the compliance and behind the scenes things that allow you to run a smooth payroll is already taken into account. And finally is guidance. So for every piece of HMRC legislation, there is a piece of guidance on the HMRC website that you can read. I understand that they may not always be digestible if payroll isn't your day-to-day function, but the HMRC also release bulletins every 2 months that highlight a higher level of payroll changes. There are also other types of guidance and support as well, such as ACAS. ACAS is a very responsive website and creates a lot of content that is very topical. For example, at the moment, they have produced a lot of content around furlough relating to furlough pay or furlough relating to redundancy. And as I've said, they issue it quite quickly and it is topical. So I would always recommend ACAS as a type of support as well. And the final common issue that we have when it comes to payroll compliance is how to avoid making incorrect payments. So I think there are 3 main steps in avoiding making incorrect payments and making sure that at the end of the month, we have happy employees, happy HMRC and happy pensions regulator. So the first is data input. Data input is the process where you will make changes or the outsourced payroll provider will make changes on your behalf. Now, one of the best ways to get payroll input into your software accurately is to have clear cut-off dates and clear audit trails. And by this, I mean, if you know that you rely on third parties or different teams to provide you with your payroll information, make sure that they know ahead of time when they need to give you that data by to minimize the risk of late or incorrect or missed payments. Clear audit trails as well is a really good way of making sure that the payments that you are asked or the deductions that you are asked to make from an employee's pay come from the right place. For example, the HMRC will be the only source for tax code changes aside from P45s. So you would know as an audit trail that if a tax code change came from any other means, it wouldn't be something that you would then input. Next is data validation. So once your input has been added into the payroll software, validating your data is the next step in the process to making sure that what has been changed is accurate and it is valid. Now, one of the best ways to do this, I feel, is checking the employee pay slips. Now, if you have a payroll software that has pay slips available all the time, I know that in PayFit, the employee pay slip is always viewable for the employer. Checking the employee's payslip is a really good way of not just viewing the change in isolation, but viewing the employee's change in relation to other aspects of the payroll. So you can view the employee's payslip to see how it impacts not just the bonus, for example, but also how that bonus would then impact the likes of tax and pension and national insurance. As well as that, it often helps to have a segregation of duties. For example, if you have somebody that has input all your overtime for 1 month, you would then choose a different member of the team to check the overtime. And it just means that there is a clear line of segregation of duties and that the same person isn't doing both the input and the validation. And the final step is data reconciliation. So data reconciliation is a really good way of looking at your payroll costs as a whole to identify any increases that you were or maybe weren't expecting. Data reconciliation includes things like breaking down different pay elements. So for example, looking at all the salary changes, and also having some set tolerances in place. For example, if you know that you have only applied a 5% salary increase to employees in the current payroll month, you would maybe investigate any salary changes within the payroll that exceed this, because this may indicate that there's been an error somewhere along the line, and you will then be able to correct it before the payroll has run. Now, the final thing that I just want to show you is a screenshot from what we offer our customers in PayFit. And this is the Finalised payroll report. And this is what all of our customers use for their data reconciliation for their payroll costs. So within this report, we allow employers to filter on gross income, but also other things that affect an employee's pay, such as the base pay, tax code changes, employee benefits and pensions. And what happens from here is you can see if there's any differences in employees' net pay. You can also, or gross pay, you can either go a step further as well, and you can choose the tolerance that you want to check. So if you know that you are happy for an employee to have a £200 difference in their gross pay, but you are not happy for someone to have a £4,000 difference in their gross pay, you can choose to look at any changes or any differences that exceed a particular percentage or monetary value. Further to this as well, we also have what we call flags, and this just gives employers another piece of information as to what has changed on the employee's pay, so that again you can easily identify errors. If you know that you weren't expecting a pay increase for an employee and their pay has increased substantially, it could be that there has been a manual input error, and you, to minimize the impact of the employee being overpaid, it gives you the opportunity before payroll has run to correct your payroll. So that's the end of my slides. I hope that you found that useful, and I hope that that makes you feel a little bit more confident in terms of running a payroll if that currently sits within your remit. Again, you don't have to become a payroll expert overnight. You don't even need to become a payroll expert 1 month, 2 months, even 6 months down the line. You know, it's impactful enough to be able to run a payroll knowing that you know where to go to get support to do so. Thank you.
Wonderful. Thank you so much, Nichola. That was really clear and just a really great overview. So thank you so much for that. Now we're going to switch gears to hear from Roshni. Great. Over to you, Roshni.
Perfect. Thanks, Charlene. Hi, everyone. So thanks again for coming to this webinar on this, because obviously compliance, for me, I find it a little bit tedious and probably the dullest task of what I do. But basically I looked online and I thought, right, okay, this looks a little bit interesting. It's just not black and white, has some colour. But basically compliance is like a bunch of rules, regulations, standards, guidance, policies that we all put in place. And I guess as finance and ops, it always comes down to us to sort everything out. It's also a super essential, important part of all of our business. No matter what industry that we're in, we basically have to be compliant within certain guidelines. So since this is for ops people, we're just going to focus on the financial implications of it, because everything else under compliance, most ops people do anyway, and it's everything that we can do to kind of run a tight ship. So I'm going to start really basically. So the way I always think about compliance is, what do I have to do as a basic process or minimal to basically abide by company law? So I break it down into 4 things. And there we go. So what do I have to report to HMRC? What do I have to report to Companies House? And that kind of goes into company secretarial. So what books and records do I have to keep legally and for my shareholders? And then everything I think about that basically falls into like a legal obligation. Yeah. So the first thing is HMRC. So usually what I do with this is, every company that I start at, I log into the HMRC account. And I think super fundamentally here is that to make sure that all your contact details are like up to date all the time. If you change your mobile number, or you've got someone else who's getting these and notifications, all that contact detail has to be relevant and up to date. Because there's nothing worse than basically trying to log in, they send you, oh, we're going to send you a little code. It goes to a mobile number that's an old one, or it goes to a wrong email address, and then you can't access your account. So the standard taxes schemes that most companies have to adhere to, so are signed up with, are PAYE, VAT, corporation tax, and then ERS, which is your employment related securities. I go on to that a bit later, but that's pretty much share option schemes. But honestly, the best thing to do is log on to your website. They also have, log on to the HMRC web portal. They have like a list of any other schemes that you may need to be part of that may be relevant to your specific industry. So if you're a charity or you work in betting and gaming, or I think oil and fuel as well, it kind of gives you another list of everything that you kind of have to report on. So again, I'm not going to talk about PAYE because Nichola happily took that over. So VAT, from what we looked at the poll, so a lot of you basically have external accountants to do this, so I won't spend too long on it. But the basic calculation is your VAT payable is whatever output tax you charge to all of your customers, less any recoverable VAT which is charged to you by your suppliers. So, and the net result of this is basically what you have to pay. Now, if you're one of those lucky companies, which currently I am, you have a little bit of revenue, but your purchases are way bigger than your revenue, or you're in R&D phase, then basically what you're saying is that you're going to have a VAT refund coming in. And actually this, you might not do it quarterly to help your cash flow. Basically, you might be submitting it monthly. But the basic rules of submitting this are paying any VAT due and submitting your electronic returns 1 month and 7 days after your period is up. So HMRC love a little bit of a good fine, interest, whatever they like to charge you. So the three main ones are that, first of all, if you've got a late registration penalty for failing to register. So let's say you've been available, I don't know, you've been set up for a couple of months, your turnover has surpassed the threshold and you haven't registered, they're just going to give you a penalty for that. The second one is the default surcharge for businesses that are persistently late in submitting returns or making the payment of liability. Now, in some odd cases, if you make the payment of the liability and the return is submitted the day after, they're okay about that. But if the payment is late and you submit the return late, then they'll charge you a penalty for that, but also they'll charge you any interest on the actual liability. If you do it twice, then basically you get put into like a default surcharge for the next 12 months, and that's not good for anyone. And the third one is penalties for errors on VAT returns. So the last point is super important because, in my opinion, since everything had to be last year submitted electronically, I feel that HMRC can see everything. They probably can't, but my feeling is they can, and so they can dig deeper into it. And therefore, I'm always like, check your VAT return, even if your accountants are doing it. There's, I think, different issues with that depending on your engagement letter with the external accountants, if it's their responsibility if they've made any errors, or I think a lot of you said you still have to review it. So the way I review it is just making sure, like a quick back of the fact packet as well, being like, right, okay, cool, these are my sales, 20% of that, and looking at your purchases and see if it roughly makes sense. But it's kind of like starting from scratch. Like, I usually have a VAT cheat sheet, and there's like simple rules for, you know, client entertainment, you can't claim the VAT back on that, or insurance is exempt. So when you're setting up your chart of accounts, which I'm not sure again if you are doing or the accountants are, to kind of set up your account codes with the correct VAT. So when you're inputting invoices, it automatically kind of populates. So the next bit, corporation tax, again, just gets even a little bit more dull. But here I'm assuming, again, based on the poll, that you've got someone else, an external tax advisor, to do this for you. However, it's still good to be on top of like filing deadlines and things like that, because even if you have to review it or the external accountant does it for you, you're still going to have to get a director in your company to sign it. And you know, I've had cases where no one has been in, and it's the worst thing if they're on holiday, and then you could be a day late or whatever it is. So the tax return has to be paid. If you have something to pay, you need to pay your corporation tax 9 months and 1 day after the financial year end. And if you've got nothing to pay, so you're loss making, you still have to report that you've got nothing to pay. And then your company tax return has to be filed by the deadline, which is 12 months after your year end. Larger companies, which I'll go into later, they pay tax in quarterly installments, and that's usually if your profits are bigger than 1.5 million. Again, HMRC, they'll have a penalty and interest, and it's a one-off penalty, and then they'll charge you interest on whatever you're supposed to pay. So ERS, I'm not sure how many of you know this, but it's employment-related securities. It's usually to do with if your company, and actually startups do use this, it's a form of incentivizing employees. We could go into different sorts of share schemes for this, but I'll stick to the compliance side of it. So HMRC basically need to be informed of any tax advantageous schemes. What do they want to know? So they want to know everything. They want to know what kind of scheme it is. So I'm going to go with an EMI scheme, because I think that's what, again, majority of startups use, because it's most tax advantageous for employees. But they want to know when you've basically set it up. They'll want to know when you've granted the options, who you've granted them to. They ask for like NI numbers of the employees that you've given, how many you've given them, how many shares you've given them or options. And then basically you have to inform, when you grant the employees the options, you have to tell HMRC of them within 92 days. Then once you've done that, once you've set up your scheme, there are annual returns again for this. So depending on when you started it, a year later, you'll have to fill out, right, if there's been any changes. So if you've cancelled any share options, in terms of like leavers, if you've issued more shares, and then obviously if you close the scheme. So finally, we've got to the end of HMRC. But the second most useful website that I use is Companies House. Again, what do they want to know? What is compliant that we have to do? Companies House, again, they have their online web filing site, which is pretty much your second best friend when it comes to compliance with companies. You sign into it, and I register for every single notification that I can get. So it will tell you when your accounts are due, when your confirmation statement is due, so maybe a month before, a week before. Companies House tell you that on the front page anyway, but the web filing is mainly for you, for when you're filing things that they will send you reminders. So definitely I recommend just signing up for reminders, and you'll get email prompts. So they have all the forms available. So if you're going to upload a form for a new director, a resignation of a director, everything is there, and it's the easiest way to basically fill out forms online. So with the accounts filing, obviously you have to, on the Companies House website, when you go to your company, it will tell you that your accounts are due 9 months after the year end, and your confirmation statement, or what people say is an annual return, is due annually as well, depending on when you incorporated your company. So for these two, if you are late, there's a possible fine and you can be struck off the register temporarily. So when I mean struck off, it might send you an email that says, oh, we're going to dissolve your company, or and then you need to take action. With the appointment or resignation of directors, you've got between like 14 to 28 days to inform Companies House of change, but actually they won't fine you for that. So I think they're a little bit more lenient with that. But the late filing, you do not want to be like struck off, even if it's temporary. So this leads nicely onto like the company secretarial. Again, it's down to ops and finance, because most startups don't have a company secretary. Everything here is basically about maintaining all your basic information in one place. So your registers, your statutory forms, your minutes of board meetings, any resolutions, all of this is super important, and actually is one of the most commonly common requests of a due diligence, which is investigated as part of the sale of a company or potential VCs. And it's easy to update as something happens. So even if you've had your seed funding and then you're going for Series A, Series A, definitely they're going to ask for everything, and so by that you've already had a couple of investments. So if you're starting the registers from scratch, it'll take a long time, and this causes a delay basically in the actual, I guess, your round of closing, because this is definitely something that they need. This isn't an exhaustive list of everything, but obviously you need to keep, when your directors were appointed, their addresses. And actually for your company books, you have to have their correspondence address, but also their home address, their date of birth. If something changes, you need to keep it noted. Person with significant control, if that changes, obviously that depends on if you're issuing more shares. Company records, that could be anything that is actually on Companies House as well. Resolutions that might be associated with depending on what your shareholder agreement or your investment agreement says, they might say to you, right, actually, if you want to do this, we need to pass a resolution. So that resolution needs to be minuted. If you've got a change in your articles of association, so let's say an initial co-founder is no longer there or resigned or stepped down, if that happens, and in your articles of association, you need, I don't know, you need to publicise that on Companies House. Again, increase of share capital or any charges that you have. So I think this list of, there's a lot more, but the good thing about this is that if it's on Companies House, you'll have it on Company Secretarial. Obviously, you don't keep the minutes on the Companies House, but everything else that you need, you should keep in one area. So now we've covered the basics of compliance, I thought we'd talk about why is it important. So fundamentally, if we look at the financial impact of it, so a lot of companies or CEOs, they may have reasons for submitting the accounts a day or 2 days late, or your VAT a couple of days late because you may not have the cash, or you're waiting for some cash to come in. And they think, you know what, a little bit of penalty and interest is not that much, so I'm not really going to save everything. They think it's a little bit immaterial. But going into a default surcharge for VAT or having a fine is not really good for future funding, and it's kind of like a black mark, so no one wants a black mark against your company. Again, the future funding, thorough due diligence is always carried out, and that's always going to highlight any non-compliance. So I put public relations up because Companies House is public, and when I mentioned before, if you put your accounts a day late, it can say this company is struck off or dissolved or what it is, a dissolution, and it will cause concern to anyone that follows your company. So a lot of your VCs or your shareholders will follow your company. So any alerts that, you know, if you filed something, they can get an email to be like, okay, you follow this company, and actually they haven't filed their accounts. So, or a company that I used to work for, we intentionally filed the accounts a day late as we had an issue with signing. Overnight in the morning, we had a few concerned customers as well as a few investors who had sent us some emails thinking that, you know, we were bankrupt or something had happened. So it's just good to establish that sort of, you know, we run a tight ship, we do everything by the book, and it shows like your shareholders and potential buyers that, you know, you run the business in the correct way. Legally, it also decreases the risk of shutting down your business or any lawsuits down the line. I think when I'm talking about that, is general compliance and not just financial, it's all compliance. And actually, again, employee retention. You'd be surprised to see how many employees actually look at Companies House to see if they can look at accounts or what's happening, if you're not that type of startup that, you know, publishes your management accounts or your quarterly accounts. But yeah, employees want to feel a little bit safe. Also, for I recently had to apply for a patent and somebody said, oh, actually I need a certificate of good standing. So you request this from Companies House, and they will only give it to you if everything that you've submitted is up to date and on time. Otherwise they won't give you a certificate of good standing, which is interesting because I've never had that problem before, but they were like, yeah, this is what we need. So yeah. So I think a couple of you had asked about common compliance issues, and I'm just going to talk about really this is in startups. I think, you know, initially co-founders, when they start businesses, they're like, you know, we're interested in growth, we need to get the product or our market right, and they don't really think about the basics or the fundamentals of, you know, how every company needs a good foundation. So a lot of issues are inadequate document and filing systems, and that kind of comes down to, you know, even your accounting records and how you file your accounts, but mainly company secretarial. And again, I think I mentioned before, it's when it comes to due diligence and it's the last minute, they say, right, we're going to sign the term sheet and sign the investor agreement, but actually we want to see your company books, and then you spend 2 days trying to get it all in order. Incorrect employment agreements in place. So again, it's when people, you know, you start hiring someone, you don't have an agreement in place, and this is again like when you put agreements with even external accountants, it's not in writing. It's kind of like, yeah, they started doing the work, and yes, okay, fine, there is a contract in place because the service has been supplied, but there's no usually like KPIs or, for example, where does the responsibility lie if they've submitted or they've done the VAT return for you, but then actually there's been an incorrect reporting in there. Does that responsibility lie with them or you? I think again there was another question about when do you kind of put your hands up and say, look, we need an accountant or we need a lawyer to do this, because startups like to save money. And you know, it is that environment where everyone's like, you know, we can do this, there is Google, we can reach out to our network, and that's all well and good, but sometimes if it is important and you can save money in the long time, spending a little bit of money now to make sure that everything is okay, is worth it. So just quickly, I've got this little calendar, but and I think Nichola spoke about some of them. What I do is I have a calendar where I think, right, what do I have to do monthly, what do I have to do quarterly, and what do I have to do annually? And then I basically put these dates into my calendar and set up reminders for them. So payroll taxes on the 19th of every month, quarterly VAT returns, the taxable profits are more than 1.5 million. If a lot of you are having taxable profits of 1.5 million, I'm jealous at the moment. So then you have to pay your CT in 4 quarterly instalments, 2 of which are due before the end of the accounting period. And then the annual things that you do are issuing P60s to employees by the 31st of May. Submission of the P11D by the 6th of July, and that's if you're giving benefits to your employees, but that could also be if you've, you know, if you've done some staff entertaining, which is above the budget, if you provide healthcare, anything like that, that has to be submitted, and then you also have to give it to your employees as well. And then the Class 1A that you pay on that has to be paid by the 19th of July. Again, we spoke of some of this earlier, submission of accounts to Companies House 9 months after year end, submission of corporation tax return 12 months, and then the taxable profits of up to 1.5 million, 9 months after the accounting period. And the last thing is, I just thought we'd talk about like resource and monitoring. So how are you supposed to keep all this information? How do you keep on top of it, as a lot of it is dates? So for my static information, by static information I mean, you know, your corporation tax number, your VAT number, your registered address, everything like that, the directors that you have, their addresses. I have a static Google sheet and I keep all the information there, update it whenever a change happens. I do the same thing with, I keep an electronic version of my company books as well in terms of the register. It's just easy, and you can just add in a new share certificate or a new director, and as long as you keep on top of it, it's okay. And I think I haven't come across any I guess apps or companies that I've seen that are good for company secretarial. So currently I just do it myself, but also I set all my calendar reminders for monthly, quarterly and annual events. Same thing as set up reminders from HMRC and Companies House, like I spoke about before. So as long as they send you the emails, you kind of know like a month before, 2 weeks, that they keep reminding you this is what you have to do. I definitely think that as you get bigger, you need to hire external accountants for audit, tax advice. If you don't have an internal FD and it's just as ops, you definitely have to, like I said before, it's worth spending a little bit of money to figure out that you've structured it properly. Or, you know, some of your investors might think, right, okay, actually part of this, once you've done 2 years, I need you to have your audited accounts in that way. You're going to have to hire auditors anyway. The bit that I've said is to use a platform is, I'm not sure, we can discuss this afterwards, but if some of you are using a company like Seed Legals or CapDex or Vested, some of them have APIs, so you can have all your shareholder information in there, but it kind of replicates Companies House. So if you make an amendment to Vested or to this platform, it has an API that will basically update Companies House and vice versa, but it kind of prompts you. Yeah, so I think I've spoken enough, and yeah, looking forward to seeing the questions.
Amazing. Roshni, thank you so much, and Nichola, thank you so much also for such informative session. We have a couple of questions now, so I think, Roshni, perhaps I will hand it over to you to just read them out, because I think it's always better if you have a look. Can you access them okay?
Yeah, I'm looking in the Q&A, right?
Yes.
So Nichola, I feel like this one's probably for you. If you're brand spanking new to payroll, what's your recommended reading, resources, websites?
Okay, so I think if you are new to payroll, one of the best places to go is going to be the HMRC website, because obviously they are the holy grail of anything that relates to pay as you earn, tax and national insurance. However, what I would say is that not all people who read it find it that digestible. So certainly I would look to maybe have a look at, you know, I am biased, but the PayFit blog has a lot of articles on there, especially what very topical payroll things, such as annual leave, furlough, redundancy, contract terminations, etc. But also the likes of, you can register for HMRC business emails and they will send you updates with payroll legislation. But within those emails as well, they'll also send you links to the likes of HMRC webinars that they're hosting, specifically for employers to help understand and implement legislation changes. Also the CIPP, so the Chartered Institute of Payroll Professionals, does a monthly magazine and also daily kind of news updates. You can follow them on LinkedIn or, you know, by accessing their website. And as I've already mentioned, ACAS as well, because ACAS is a very employer friendly way of finding out employer like HR and payroll information.
Okay, and the next one is, what's the best way to keep up to date on new compliance requirements on an ongoing basis? So I'm going to kind of go on what Nichola said, and obviously my two best friends, my two best websites, HMRC and Companies House. I sign up to any form of update that they do, and they regularly send me on a monthly basis. Do you think that this webinar would help? Actually, we've updated VAT. We've updated our tax guidelines. And you can choose to go to a webinar if you know, I usually click on them, and if I don't have the time to attend it, they send you a link afterwards. So they have slides and things like that. But also, I've signed up to a few accountancy firms. They have a lot of information on their websites, and the bigger ones, I think actually the top 10, you can sign up. They might send you an email about, you know, do you need some advice? You can just ignore them. But they actually do send you updates as well, and they refresh it on a yearly basis, right? And anything that is compliance related, all these accountancy firms or business firms will have, and they do an update. And definitely if you subscribe to HMRC, Companies House, and maybe, I don't know, 2 accountancy ones, you'll definitely know and keep up to date with everything that you have to do. And I think that's it, unless I'm, yeah, I can't see anymore.
I think we don't have any more questions. I think one thing, Roshni, that you have shared with me a while ago is that Google Sheet that you mentioned. If you're fine with that, we will be sharing it with everyone. But if anyone has any questions, here's your chance.
In the meantime, I'll tell a little anecdote so that people have the time to type out their last questions if they want to. Roshni, it was actually quite interesting that you were saying that if you submit a day late, then you might end up being marked as dissolved on the HMRC website, or Companies House rather. I was doing a credit check for a client a while ago, and one of the clients had that happen, and it was panic all over. We thought we weren't going to get paid at the end of the month. They didn't know what was happening, and it went in such a stressful situation, all because they were a day late. So it's definitely something that stuck with me, where you do not want to mess with that at all.
Yeah, it's even if, so I even informed, I rang them and I said, look, we're going to be a day late. They said, yeah, it's fine, but it doesn't matter. I think it's that automatic that they know, that they have, they're like, right, it's not been done. It's not been uploaded onto our site. So they'll probably just say, right, it's an automatic response. Okay, the company struck off, and then everybody panics, because that's not a good thing to hear at all.
Thank you so much for this session this evening. It has been incredibly helpful for everyone who is here with us this evening. This is not the last of our events. We are going to have a couple of more. So as you can see, we have Finance for Ops number 5, which is going to be on procurement, treasury, and cash flow management. And then we will be closing later in the autumn with how to build a finance team after you have exhausted all your knowledge about compliance and financial planning, and you can't take it anymore, and you need to hire finance professionals to actually take care of the detail. If you would like to find out exactly when those next events are, and also follow our news, please follow us on LinkedIn, on Eventbrite, and also you can sign up on our newsletter at operationsnation.com. If you have any more feedback, or if you just want to say hi, please get in touch with us at hello@operationsnation.com. We're here for you if you are looking to inspire us in terms of what other content we should be producing, or if you have any suggestions for any upcoming events, please let us know. Drop us a line. Thank you all so much for being with us this evening, and Roshni and Nichola, thank you so much for participating in Finance for Ops series, for your initiative, and for sharing your knowledge as well.